buy, rehab, rent, refinance, and repeat. If you invest in a neighborhood that has low purchase prices but high rent, this makes the BRRRR strategy very easy. This stands for buy, rehab, rent, refinance, repeat. And here's how it works. Let's say you buy a new property for $20,000 and you put about $10,000 into it during the rehab. Now you're going to rent that property to a tenant. You'll start getting rental income, but that's a subject for another video. Now here's the magical part. You're going to refinance this property with a lender, but you don't want to over leverage. Leverage about 60% of the value of that property. Now that you've rehabbed it, rented it out, that property has now increased in value. Let's say it's worth $100,000. Take $60,000 out of that property. This way you'll still have equity in it. Remember what you put in? If you had claimed this on your taxes, you would have paid over $3,000 in income tax. But now, this is tax-free income. And so is this. This is because you do not pay income tax on debt. Now the final step is repeat. Buy another property, rehab, rent, refinance that property, pay your expenses, your cell phone bill, your home office expenses, and put some money into your units. But make sure you save enough for your next property. Now claim zero, maybe even a negative amount on your income taxes. What comes after refinance? Repeat. You see the pattern? Buy, rehab, rent, refinance, and repeat. And that's how you use the BRRRR strategy.